This is exactly how I made $2,100 today as a 21-year-old day trader with my exact strategy. It's so easy, you could be making $1,000 a day off of it. So I'm going to walk you through the strategy I use step by step so you could use this to benefit yourself too. Now, to get started in this thing, we're going to walk through exactly what I did. So I always start off my days by marking out liquidity, session highs, session lows, and maybe news highs, news lows. Now, whenever I see this right here, you see how big that gap is? That's probably like 200 to 300 points. Maybe it's 100. I always drop down to the next lower time frame and look for the next areas of liquidity. Mark out all those. Now, there's nothing down there, so I know there's going to be something on the 5-minute. There we go. There's an order block right there. All right. So now that I have all my liquidity marked out, I'm going to wait for pre-market for a liquidity sweep. So if we look right here, I was bullish. So at the beginning of this day, I was very bullish. We had a London liquidity sweep of the Asian session, but we had a little reversal because this was all uptrend. I was more so expecting a continuation of that uptrend. So that's what I was looking for. I was looking for a liquidity sweep down here, which by the time the market opened, that's exactly what happened. I started noticing, hey, ES is kind of showing signs of a SMT. Let's wait for a 5-minute market structure shift towards the upside before I even think about entering into a bullish trade. Mark out liquidity plus daily bias. If you have questions on that daily bias, just comment down below and I'll answer them. Waiting. Okay. Now, we see an opportunity for a market structure shift, so that's when I started finally going down to 1 minute. Now, we're still very bearish right now, so it might be safe to think of more of a bearish outlook if I get a 5-minute liquidity sweep. I went over to ES to look. You always got to keep track of those two things. My strategy, I always keep ES on one screen and NQ on the other screen. I saw that there was a liquidity sweep on ES on the 5-minute. And you know what that also looks like? An SMT. What? No way. An SMT? There's no freaking way. And so I go back onto NASDAQ. So now that I have a liquidity sweep, now I'm looking for my confluences. I'm waiting for a market structure shift with a retracement to continuation. So what does that look like? So we're waiting for a market structure shift, which we actually got right there, but the 5-minute wasn't closed yet and we didn't have our SMT. So then we saw that. I saw that candle. So market structure shifts right there because there's a red then a green, so that's a low right there. So you see a market structure shift with a fair value gap. So I'm thinking, okay, well, there's my setup right there. As long as it retraces to there, so we're waiting for a part of that number 3, a retracement. Let's look for a retracement. So we get it. Okay, now let's look for a continuation candle. Until I saw that candle, so I hopped in for a sell. I was actually on MNQ. I believe I risked around 350. I had eight contracts. So you mark out your take profit. So I put my stop loss above the high. This is all for example. We have our stop loss. Now we're waiting for it. So I put, I think, about 3 contracts right here because this was a 5-minute low. We have a 5-minute low. And then I went back looking for more 5-minute lows that it might possibly retrace to because we're in such a huge gap, as you can see. Look at this. There's not a single 5-minute candle, you know. It was really deep here at the end of this fair value gap because I see a lot of times with these big fair value gaps is it'll wick past it and then come back up. I always have my fair value gaps outlined because if it closes above the fair value gap, I take out my trade no matter what because it shows that there wasn't enough strength to go down. Now, some of the times I may be proven wrong. I don't care. I'm still taking myself out. And we saw that. And I was like, oh, Bubba, that was liquidity right there. So I moved my stop loss down to there. Oops, sorry. No. And waited for my take profits. And then the first one was hit about here. Here it goes. So that was first take profit. So I made around, I believe, $400 to $500. And then I dragged my stop loss down to break even because that's where the next liquidity is. So I just let it right there. So I was up 500, and if it came back and stopped out, I was going to be up like another 90 bucks or something like that. So I was good with the day. That's amazing. That's $15,000 a month if you make 500 a day. Well, I just let this baby ride really up until it hit. I took 2 more contracts out right there, and then I took my last couple here, and then I dragged my stop loss down to here, and this is where I let it play out, and it was a solid 2100. Now I know what you guys are thinking. You guys are like, oh, if you let the whole thing ride out, you would have made well over a couple grand. Well, I made a couple grand, so suck on that. Now that's a thing a lot of you guys don't do. You don't have the balls to pull the trigger, which you actually need to do. Only, let me rephrase this. Only if all, get this through your head, the boxes are checked. Do not take a trade if all your freaking boxes aren't checked. Stop taking trades that aren't your strategy. It took me so long for it to click through my head. Write down your rules on a notebook. Please, I'm begging you. If you're going to sit here and tell me that you want to be a #1 day trader, if you want to be making all this money, tens of thousands of dollars a month, you can't follow your rules for 1 month. Come on now, be real. All you have to do is find a strategy and follow your rules. Here's the exact strategy. I first start off by marking out all the 1 hour highs and lows. I drop down to the 5 minute, and I wait for New York open. Then I wait for a liquidity sweep. Once I see a liquidity sweep in the direction I want it to go, I drop down to the 1 minute and wait for a market structure shift. Once I see that, I'm waiting for 2 things: a retracement to a continuation. I have to have at least 2 confluences to be confident in my strategy. So if I have a fair value gap, I'd love to see an order block or equilibrium being hit as well. I want you guys to implicate your own will into your strategy. So if you guys don't like fair value gaps or order blocks, and you like inverse fair value gaps and all these other confluences, I recommend you switch them out. Find whichever confluences work best for you, whichever click the fastest in your brain that you can recognize it. Use those and apply them to yourself. That's how you implicate your own will onto your strategy. Once equilibrium and a fair value gap or any 2 confluences have been hit, I wait for 1 continuation candle. I enter. Stop loss above recent highs on the 1 minute. Take profit at the next liquidity. Boom. You got to have the balls to enter. It's very important. Some of you guys get nervous. It's important not to fold under the pressure.